to all of you and welcome to our new episode. Please watch our video and don't forget to like the video and subscribe to our channel.
These days, it is normal for people, especially working people, to opt for loan to buy house or car or other personal expenses. I think most of them know about things to consider before applying for loan.
Yeah, exactly. See now, earlier days, say 25, 30 years back, people used to buy house, car, and other capital good after the retirement from the savings they made or the PF balance they accumulated or the gratuity they receive at the time of retirement and or other source of funds. So these situations have changed now because personal loans or retail loans, take house, homes loans, and car loans are easily available. So the youngsters, the new generation, have started thinking of buying car and house. The moment they get their first job. So they do a lot of research on things that are important before applying for the loan. The things like how much amount the lender will give, how much down payment the borrower has to bring in, whether it involves processing charges, whether they can pre-close the loan, and whether is there a penalty involved, and what will be the EMA amount, what will be the loan installment tenure, and what will be the CIBIL score required for the loan, the minimum income required for the loan, and so on. So they do a lot of research, to compare them between the lenders. See, when I say lenders include banks and NBFCs, non-banking financial companies, like Aditya Birla Capital, Bajaj Finance, Muthoot FinCorp, and so on.
Yes, these are absolutely important thing. But I think the interest is more important because it directly affect the EMI amount and loan tenure. Let us talk about this aspect on this video.
Yeah, sure. We'll do that. See, now, interest is undoubtedly the major component after the loan amount in the total cost of the loan. So, this too makes the total, the loan amount, the principal amount, and the interest make the total cost of the loan, and divide that by the number of installments you get the EMA, meaning equated monthly installments. There are some complicated calculation behind that for making it equated. We will not go into that now. So, but then you don't forget to factor in some other costs like the pre-closure penalty, if any, the processing charges, etc. If you are comparing the total cost between lenders.
I understand the interest is of two types. One is fixed interest and other one is floating interest.
Sure,
Can we examine how they differ?
sure. See, floating interest, as the name suggests, remains fixed or same throughout the tenure of the loan. Floating interest changes during the tenure. So how it changes? It changes based on the market conditions, the financial market conditions, the RBI policies, and other factors. So when I say RBI policies, you might have heard of RBI maintaining the status quo of repo rate at 6.5 in the recent monetary policy committee. So their decisions on repo and bank rates, in terms of increasing or decreasing or maintaining the status quo, influences the lending rates of the uh, lenders in addition to other factors. So they periodically revise the lending benchmark lending rate, which in turn affects the interest charged to the borrowers of floating interest rates. So I will give you a small example to explain to you. Now, see, we all know about fixed deposit. We get an interest rate which is fixed. So this is similar to the fixed interest rate that the lenders charge on borrowers. So now you may be investing in shares, for example. When you invest in shares, you get certain incomes like dividend or capital gain or incur capital loss when you sell the shares, and these are all not fixed. they they don't remain same. They changes. They change from script to script, the shades to shades, and within the shades from time to time. So this is similar to the floating rate what we talked about.
Okay, how does the floating interest affect the borrowers?
Yeah, it's very simple. When the lending bank increases the floating rate based on factors we discussed earlier, it enhances the EMA amount or elongates the EMA installments or both. Okay, if when it reduces the lending rate, then it decreases or reduces the floating interest the lending rates, which in turn reduces the floating rate charge to the borrower. So now just look at this. Fixed interest rate won't change. Despite this changes in the lending rate of the borrower. But we must look at the notional loss or gain fixed interest regime borrowers uh, make. See, for example, when there is a increase in the floating rate, fixed interest rate remains same, which means they don't incur that extra interest charged to the floating interest borrowers. So if the floating interest rate reduces, the fixed interest borrowers won't get that benefit of reduced interest. So it's a national loss or gain for the fixed interest borrowers.
Okay, by the way, what about certain RBI rules regarding floating interest versus fixed interest?
Yeah, we will talk about this. Very, very important. See, now what happened was, see, the lenders, would change, revise their lending rate, would increase the floating charges to the borrowers. And if it is increase, then they would enhance the EMA amount or elongate the installment number. I mean tenure or both, and then the borrowers were caught unawares, and it made their life miserable because it became very difficult for them to manage their funds. So RBI has come out with a solution to address this problem through three different rules. One is they mandated that the banks should allow borrowers to switch over from floating rates to fixed rate at any time during the tenure of the loan. But how many times it can be done is given as a discretion to the lenders. And see also that it has mandated that at the time of disbursement the lender should educate or inform the borrower about the difference between fixed and floating interest and how that will impact them in future, their EMA amount and the tenure and so on. And also that if there is any revision of floating rates at any time, they should communicate that very clearly to the borrowers, detailing the revision, the increase made, and how that will impact the tenure, the loan amount, and so on. So bringing in a lot of transparency. So this is applicable for both existing as well as new borrowers, and RBS mandate that these rules are to be implemented by the lenders before end of 2023.
That looks like a nice initiative, but which rate is good for borrowers?
Yeah, so there is no single word answer to that question. We have seen the impact of fixed interest and floating interest on the borrowers. So one thing we have to note is that the fixed interest is always higher than the floating interest by 1 to 3%. That's a no. So now coming back to the question, um, I will give some tips, but don't take it as a professional advice. Don't go by that blindly and then blame me if anything if it doesn't work out well. So you have to make your own decision, analyzing the facts. This is my view, and not a professional advice. See now, if the borrower is a fixed monthly earner, and he is a conservative risk taker. I mean, he doesn't want to take much of financial risk, and there was a very marginal or not much difference between fixed and floating interest, and then there is the borrower's income is sufficient to pay the EMI every month. Then I would recommend going for a fixed regime. Now, if the borrower has some basic understanding of the economy, finance, banking, and or they follow the expert opinions on these topics, and there was good difference between floating and fixed interest rates, and they have some leverage to take financial risk. I will recommend going for floating rates. So now the bottom line is this: you have to do your homework, do your due diligence, and then take a right decision. But it is very important for big ticket, long tenure loans like home loans.
Thank you for watching this video. Please don't forget to like it and subscribe to our channel too.
Yeah, we will be
We
back with another
another
video
video
on
with
another
another
topic soon.
topic. So
Till then, bye. Take
bye.
care.
Take care.